Hey everyone, Palo Alto Networks stock price has crashed from over $360 per share down to $280 per share, which has a lot of investors now asking if it's a good time to buy Palo Alto Networks stock. But that's not what I'll answer in this video. In this video, what I'll do is I'll look at longer term investing in Palo Alto Networks stock, where the stock price could be in 5 years. So not really looking at the near term, buying today, how much could it be at the end of the year, but looking at it long term, 5 years, and whether or not investors can make money after buying Palo Alto Networks stock on this lower valuation. So let's get right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So one of the numbers I need to make this prediction is its current share price. I mentioned it has fallen significantly after it reported earnings in late February. The stock price is down to $279 per share from over $360 per share it was trading in February. Now, one of the main reasons Palo Alto Networks stock price fell was because it's forecasting lower than expected billings growth in the next quarter and for the next several quarters. One of the reasons for that lower expectation is Palo Alto Networks is undertaking a competitive strategy where it's going to offer free trials to customers switching over to Palo Alto Networks and trying to capture market share. I highlighted that that's a risky move from Palo Alto Networks for two reasons. Number one, it's going to decrease revenue in the near term because some of those customers would have switched over to Palo Alto Networks anyway. By offering free trial, it's not going to generate revenue from those customers that could have been switching over paying full price. The second reason it's risky is because when you make a competitive move like this, when you take aim at taking market share, rivals in the industry usually react with moves of their own. And so if their rival makes a similar move trying to take market share, that could be another step in increasing competition, which is bad news for industry-wide profitability because it can lead to a tit-for-tat kind of situation where Palo Alto Networks offers free trial, its rivals offer free trial, Palo Alto Networks steps up the incentives to try and take market share again. Its rivals step up their incentives to try and take market share. And this kind of behavior increases costs on business and decreases profitability. So that's why I mentioned the second part is riskier than the first part if the rivals start to make competitive moves. So far, I haven't seen much of that in the cybersecurity industry following Palo Alto Networks' move, but I've been paying close attention. I'm following this industry closely following this big strategic move by Palo Alto Networks. I also need Palo Alto Networks' current price to earnings ratio is trading at a forward PE of 45.21. And I also need the earnings per share expectations for the next 5 years. Analysts on Wall Street that are following Palo Alto Networks stock, they think it's going to grow earnings per share at 17.83% for the next 5 years. Now, despite those headwinds I mentioned earlier, the cybersecurity industry overall is growing. Every day, more and more companies find it necessary to add cybersecurity services. It's more of a must-have now rather than a nice-to-have. The industry overall will continue growing over the next 2 to 3 decades, in my opinion. As more and more of our lives are conducted online, there needs to be more and more cybersecurity. That's going to benefit the industry overall. I also need Palo Alto Networks earnings per share expectations for the year 2025 specifically. And according to the same Wall Street analysts that are following Palo Alto Networks stock, they think it's going to deliver $6.15 in EPS in 2025. You can see Wall Street has also been downbeat on Palo Alto Networks, just like I have been in recent months following the recent developments at Palo Alto Networks. Analysts on Wall Street were initially expecting Palo Alto Networks to deliver $6.42 in earnings per share in 2025. That was 90 days ago. And then today, they're only expecting $6.15 in earnings per share, or roughly 5% lower than what they were expecting just 90 days ago. So Wall Street has also raised their caution flag on Palo Alto Networks stock, just like I have, following these competitive moves by the industry leader. Now that we have the numbers, we can go ahead and make our stock price prediction. Let me draw your attention here at the EPS of $6.15 for 2025. We just got that from the Wall Street analyst estimate. If I apply the 17.83% growth rate that Wall Street expects its earnings per share to grow at over the next 5 years, and I apply it to the $6.15 in 2025, I get an earnings per share estimate of $13.97 for the year 2030. Now, if I apply the current forward PE multiple of 45.21 to that EPS multiple of $13.97, I get a potential stock price of $631 per share for Palo Alto Networks 5 years from now in 2029. Now, the current stock price is $280 per share. So if that scenario comes to fruition, that would mean that Palo Alto's stock price would more than double over the next 5 years. But it's more than likely that the forward PE actually falls. I'm not certain by exactly how much, so I've modeled out several scenarios here of where its forward PE could decrease to. If it decreases to 40, the stock price could still increase to $558 per share. If it decreases to 35, the stock price would still rise, but this time to $488 per share. And finally, if the forward PE falls to 30, the stock price could rise to $419 per share. All of the scenarios I've modeled here have Palo Alto Networks stock price rising over the next 5 years. And I think that's the most probable case is 5 years from now, Palo Alto Networks stock is likely to be higher than where it is today. That's the most probable scenario. Now, for Palo Alto Networks stock price to fall, the forward PE ratio would need to be significantly lower, something like 12 or 15, which would bring the stock price down from $279 down to $209 per share. This is a scenario that I see as highly unlikely. Although there is a non-zero chance it happens, I see it as highly unlikely that its forward PE falls all the way down to 15. I do expect a decrease, but not all the way down to 15. So given all of these different scenarios I've looked at, where do I think is the most likely scenario? I would say something in the range of 45 forward PE to 40 forward PE. And I would say the stock price could be somewhere between $575 per share and $625 per share 5 years from now. And that would be roughly double where it is today at $279 per share. So not that robust price per share increase for Palo Alto Networks. And that's following the less than stellar earnings per share growth expectations for Palo Alto Networks. It's expected to increase at 17.83% over the next 5 years. Solid growth for earnings per share, but lower than where it was, let's say 3 months ago, 4 months ago, than what I was expecting for Palo Alto Networks and the cybersecurity industry overall. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.